Welcome everyone to Daily Mortgage Rates Live with the Mortgage Calculator. We'll wait just a couple minutes to get started here, go live on all the different platforms. Hope everybody's had a great week, ready for the weekend. This week went by pretty quickly because of the holiday. But we are back at it here today to get into the actual live rates and then do a deep dive into our topic for today. Just give us a moment to go live on all the different platforms. We are streaming this on YouTube, Facebook, LinkedIn, and Instagram. Feel free to drop a comment there in the chat. We did put the chat up there so you can drop a comment as you tune in. Thank you for everybody who was already dropping comments there. I see Amanda, Mark, Adam, Christina, Sonara. Good morning, everyone. Susan, thank you for tuning in. Heather, good morning. We will get started here in just a moment. Malik, good morning. All right, looks like we are good to go, so we can go ahead and get it started. We'll take the chat off the screen here, and then we will get into it. So welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show, Daily Mortgage Rates Live, is go through the actual live mortgage rates for different programs. And then we do a deep dive into a different topic each day. Now, today's deep dive is going to be investment property second mortgages. So our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and a realtor, is going to do a deep dive for us into that topic. But before we do that, we'll do what we do each morning, which is pull up our pricing tool and go through the actual live rates today. So Nick, let's go ahead and pull up the pricing tool and see what the rates are looking like this morning.
All right, let me switch my screen and we will get started. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR, including all the fees for today. It is July 7th, just after 11 a.m. Eastern. So all our basic programs are live. If you'd like a full breakdown of all the fees that go into the APR, a full loan estimate, please get with one of our team members. We have over 300 licensed loan officers, and we can do loans in 24 states for primary and second homes. And we offer our DSCR business purpose loans, which is one of our favorite, in 44 states. So a lot of different options there. Please get with our team. For today's demo, as we do every morning, we're going to set up a basic scenario. We're going to set a $400,000 loan amount. We'll set the LTV to 80% loan to value, 20% down payment. We'll set the desired price to $99. That means we're going to ask the computer to find the best rate at one discount point in cost, which is the typical request these days. And we're going to compare our programs. We'll start with conforming conventional as we do every day. We'll compare that with FHA, which is usually the second example. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs with alternative income documentation. We also offer VA and USDA, but remember, VA is only for our eligible veterans and active service members. If you are, we'd be happy to quote it. It takes just a few minutes, but not everybody is. And same with USDA, that's only for properties that are eligible in a USDA eligible area. Since not everybody's shopping in those rural areas, we don't do that live, but if you are, we'd be happy to quote it in just a few minutes. We'll start today with conforming conventional. We're going to set up a purchase 30-year fixed loan, standard loan, primary occupancy, a single family home, 1 unit, state of Florida, county of Miami-Dade, and for our demos today, an estimated FICO score of 760. And an estimated debt to income ratio of 40%. So with these basic settings, let's check the conventional rates this morning. All right, so, well, actually that's not even a conventional program technically, that's a portfolio. So this is the first conventional option that popped up, 7.375 rate, 0.875 discount points, and a final APR of 7.538. So in a couple hours, I would imagine these will go down a little bit after we had a lot of panic yesterday in the markets due to an increase in the treasury rates because of the news from the Fed. So a lot of reaction there, and I expect to see this go down a little bit over today and definitely next week, hopefully. But if our customer doesn't qualify for conventional for any reason, we'll set up the same scenario. And typically the next option that most people go with is FHA. FHA does allow a little more leniency on credit events that may pose a problem for conventional, as well as a higher debt to income ratio that we can go with. So for this example, we will keep everything exactly the same. That way we can compare apples to apples across the APRs. So let's see what the FHA rates are for this exact scenario. So as expected, FHA is a little bit better rates here. 6.625 rate, 0.875 discount points and cost, and a final APR of 7.213. So a little bit lower on the APR. Remember, we're comparing apples to apples. That APR includes all of the fees, including the mortgage insurance, the upfront and yearly that are required for FHA. So in this case, for this borrower that might qualify for both, FHA is actually a little bit cheaper. And for those that only qualify for FHA, definitely a great thing that has been happening lately where the FHA rates are actually a touch cheaper here for our borrowers. So if you qualify for both, definitely don't overlook the FHA options. Now, where we really love to specialize here at the Mortgage Calculator is if a customer doesn't qualify for either FHA or conventional. Many other banks or lenders don't have other options, but that's where we love to specialize. We have over 5,000 additional loan programs under expanded guidelines, also known as non-QM. So we'll keep everything else the same as our other demos, but we have one new option, which is our income option. We will typically choose a non-QM program so that we can choose an alternative income. Full doc is what we use for FHA and conventional. That's 2 years of tax returns. So we'll typically choose this to use an alternative, such as our asset-related programs, business bank statement programs, our investor programs we'll talk about in a minute. Our personal bank statement, 12-month is our most popular program by far, so that will be the one we use for our demo. We have RSU, stated, VOE, 1099, P&L, no income at all kinds of different options. But the most common is our personal bank statement 12-month, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they have 2 years of tax returns, have different write-offs and may not qualify at all or may not quite qualify for as much income as they want. That's where these non-QM programs come in. We can use 12 bank statements instead of their tax returns. So we simply get their last 12 bank statements and determine a debt to income ratio of 40% in this case, using their actual cash in the bank. So most borrowers that are self-employed qualify for double or triple the income, therefore can get the house they really want or can qualify where they wouldn't qualify at all. So these are amazing programs to solve problems for our borrowers that might need a little extra help. So let's check out the bank statement options this morning. So that one that popped up earlier is a bank statement option, portfolio option. 7.375 for 0.875 discount points and cost, and a final APR of 7.437. Excuse me. So some great options here for our bank statement programs. Actually, in today's rates, a touch cheaper than conventional. Rarely happens. Might only happen for a few hours here as the markets stabilize, but this is where we get excited, where our non-QM programs can actually beat conventional for the exact same borrower in the exact same situation. But some of the higher rate options as you scroll down may allow other things such as bankruptcies or foreclosures and other things. So there are a ton of options. Not only can we use bank statements, but a lot of these options allow us a little more leniency on some other items as well that we can take advantage of for our customers that may not qualify for the standard programs. So a ton of options here. Please get with our team, find the best one for you. Now, before we go into Jose's very unique example here, we always want to do live rates for investment properties. So we'll do our last 2 scenarios for an investment property purchase. We love to work with investors, whether you're a first-time investor or a seasoned investor with many properties. We have some great options. We'll set up the same scenario, 80% loan to value, 20% down payment, and we'll compare our 2 options. We will have conventional options, and we will check out our non-QM options. Remember, all the government options are not applicable for investments, so those are not an option for this. We'll start with conforming conventional. Everything else will stay exact the same as all our other demos, except we've edited the occupancy to investment. So let's see what the conventional programs have added for investment properties here. So it's definitely a little higher rates. Typically, the investment properties have a loan level price adjustment, we call it, which is pretty hefty here on an investment property. So the best option for an agency loan here, 7.375 rate for 4.5 discount points in cost and a final APR of 7.658. So a great option for our customers that qualify, but most investors want a higher rate option to reduce these discount points. So in this example, $18,000, 4.5 discount points is a lot of money that our investors can deploy elsewhere. So most investors, as long as the property cash flows, don't mind going up a little bit in rate to save discount points. But unfortunately, there really aren't options for conventional at this time. So that's where we love to present our non-QM options. So for the last demo today, we'll set up the same scenario, investment property, and this time we'll pick expanded guidelines, aka non-QM. And the first thing we need to select is our income option for our investment properties. The DSCR is the most popular program by far and our most popular loan at the company by far. And that's because it doesn't actually require any income or employment. We're simply going to use the estimated rental income from the property we're purchasing in this scenario to determine if that rental income can cover the PITIA of the mortgage we're proposing. So if the rents can cover that, that's a ratio of 1.00 or higher, aka the property cash flows on a monthly basis. It makes more money than it costs. And we even have options for a ratio under 1.00, aka the property doesn't cash flow on a monthly basis. So a ton of different options here for our demo. I will put 1.5, which is the highest value that we really put in here, just so we can see all the different options. And the final thing we must select is a prepayment penalty. That is standard for a non-QM investment property. We always select 3 years. There are 0 prepayment penalty options that will cost more, and not all loan programs allow it. And there are 5-year options as well to save some money if there are out there, but not all loan programs allow it. Most common is 3 years, so that's what we always use for our demo. So with these settings, let's check out the DSCR rates this morning. Hopefully very comparable to conventional. That's when we love to take action here. All right, so looks like the best option, 8.375 for 0.975 discount points in cost, and a final APR of 8.441. So remember, the conventional was just in the high 7s, not quite over 8. Some of the options were a little bit over 8. And now we have a non-QM option for just over 8.4. So very comparable there to use the DSCR programs. No income, no employment from our borrower. Our borrowers that have multiple rental properties can do multiple loans at the same time and cash out multiple properties to purchase multiple properties. A lot of flexibility afforded here when we go with the DSCR program. And we have hundreds of different variations. We've done a few this week. There are variations as well for prepayment penalty you see here, as well as some of these programs at the higher rates may allow things like short-term rental income or foreclosures or bankruptcies. All kinds of different options we have once we get into DSCR. So please get with our team. We can do all kinds of different features and really adjust these DSCRs to our liking, as we went over earlier this week. Now for today's deep dive, let me switch my screen. Today's deep dive topic with Jose Gonzalez, our sales manager, is going to be on investment property second mortgages. So we've touched on these a little bit this week. We did some of our loan officer training on these topics on the second mortgages. But what's really unique about these fixed rate second mortgages that we offer is that we can offer them for investment properties. So for our investors out there, maybe have a great rate on their first mortgage, but are very interested in, the type of loans that we do, the non-QM stuff, the DSCR stuff, using alternative income, and of course, maximizing their cash out ability for their rental properties. These are amazing options. So especially with the market the way it is right now, these are very, very viable programs. All the loan officers watching, definitely recommend you pay attention and offer this as an alternative for any investors out there looking for cash out. And for any investors out there, definitely pay attention. This could be the option that you're looking for. So with that introduction, I'll go ahead and let you take over, Jose, and then we'll pull up your live quotes.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Today's topic, second mortgages. Really, we refer to them more as HE loans, right? Home equity loans as opposed to a home equity line of credit, right? The difference between the home equity loan and the home equity line of credit is that if you were on our second mortgage training earlier this week, you note that the home equity line of credit is a open-end mortgage, so it's going to be a variable rate product, and it is going to the interest rate. The interest payment will fluctuate along with the balance. Versus for the HE loan product, it is a closed end second mortgage, and it is going to be a fixed rate product. So definitely two totally different things. Now the HE loan is a little bit more restrictive in their guidelines than the HELOC, right? So the HELOC is going to allow be a little bit more lenient with the housing history, uh, whereas in some cases in the HELOCs you can have 0 times 30 for in the last 6 months, and in the HE loan it could be 0 times 30 in the last 12 months or in the last 24 months, depending on which option that you choose. But the benefit is that the HE loan is a lower rate, right? So it is a lower rate on the HE loan than it is on the HELOC. And also, if you want to be able to plan your interest rate payment, you'd be a lot better off with the HE loan. And also, one very important point here, the HE loan does allow us to use bank statements for income on investment properties, as opposed to the HELOC, which does not let us do that. So let me share my examples here with you on the first one that we have here, which is for a purchase option, second mortgage, full doc HE loan purchase of a 1 unit. Now this is doing a combo loan, so we do have a purchase price in this case of 500. We have a down payment of 150. We have a first mortgage of 250 and a second mortgage HE loan of 100. And this is just giving us the rates on the second. And this again also is for an investment property, right? So here you have 12.375, offering a little bit of a lender credit, and you can buy it down to 11.75 for about 1.2 points. So that's pretty good pricing when you consider. I was checking out some HELOCs, and something similar to this would be about 1 to 1.5% higher, full doc. So here's where it really gets interesting, and where the HELOCs, as they say, can't touch this, is once we use bank statements. Now, this is for, again, investment property using 12 months business or personal bank statements. Now, we do allow the use of 12 months, but the business has to be have existed for a minimum of 2 years. Right now, it could have been they started as a sole proprietor on that business, and then the business transition to a corporation or an LLC. As long as it's the same business, exact business, you would not have any issues as long as you have at least 2 years. So here you'll note that the rate for bank statements is only slightly higher. I think the other one was 12.375, and this one is 12.625 for your bank statement on the 1 unit property. So now I just want to show you a 2 to 4 unit property. And this one is our full doc option. Oh, excuse me, bank statement. This is our bank statement option. Full doc option is next. And this one you'll note now, very important here, the rate is the same. There is no loan level price adjustment for a 1 unit, a 2 unit, a 3 unit, or a 4 unit. Now, that's all super important for the investors, because we have a lot of our investors that are also self-employed, right? Or it just may be easier for them to use bank statements, being self-employed, because if we were to use their tax returns and have to incorporate all of the write-offs that they have for all of their properties, all the depreciation and all the other things that are on there, even though depreciation, we can add it back, but all the other expenses that they have, chances are they may not qualify full doc, but they will qualify with bank statements with only a nominal adjustment to the rate. As you can see here, our 2 to 4 unit, same rate as the 1 unit. All right. And we have our cash out here. This is full doc now, showing you. Now the 2 to 4 unit and the 1 unit is going to be the same rate. Here we're showing you a cash out full doc. So on the cash out, you'll note that the rate does go up a little bit, quarter percent higher rate on the cash out refi versus the purchase. So that's a pretty good thing right there. So you're looking at your full doc cash out refi, and then your bank statement cash out refi. We're seeing the same trend. It's a quarter of a percent higher when we're going on the bank statement versus the full doc option. No adjustment if we're going 1 unit or 2 to 4 unit. So this is a great deal for your investors out there, and for the MLOs trying to put deals together. Either if you want to do the combo loan, or if somebody needs, they want to tap into that equity, they don't want to touch that low rate first mortgage, this would be the way to go. There is a blended rate calculator. There's many blended rate calculators out there. So make sure that you do access the blended rate calculator so you could fully confirm for your borrower that is the best option versus possibly refinancing into a new first mortgage.
All right, great. I don't see any questions, so I think we can go ahead and wrap it up. Again, great options here. Just another one of the tools to have in your tool belt as a loan officer consulting your clients, and as a investor, another tool there that you can use to particularly cash out and get some more properties, using the DSCR programs that Nick was talking about earlier is always a good route to go. So thank you everyone for tuning in. Remember, we do this show at 11 a.m. Eastern time every single weekday, where we go through the live rates and then do a deep dive into a different topic. If you'd like to connect with one of our loan officers to get a full quote, you can visit us at themortgagecalculator.com. We have over 340 loan officers licensed in 24 states, and the DSCR loans that we love, we can do those business purpose loans in 44 states. So thank you for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all on Monday at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great weekend.
Thanks, everybody.